This is the Fintech Nexus 5. I'm Bo Brustkern, and here are the top stories in fintech for the week ending August 12th, 2023. The SEC and CFTC fined a gaggle of commercial banks for failing to adhere to communications recording practices. Basically, folks are chatting on WhatsApp and Signal, which can't be recorded and preserved. Apparently, even the compliance officers were getting in on the side chatter. Similar cases in 2021 included the likes of Chase, Goldman, MoStan, and Citi. This week it was Wells, BMP, SocGen, and BMO, along with investment banks Houli, Moelis, and Wedbush. Total penalties across these FIs is now over $2 billion. It's a lot of jack. Next up, despite the regulatory mess that US enforcers have, in their infinite wisdom, conferred upon us, financial giants are moving forward with crypto innovations anyway. This time it's PayPal, one of the world's fintech giants, which announced the launch of its very own stablecoin, PYUSD. Apparently, some technologies are just too important for the advancement of our socio-economic fabric to let little things like governmental idiocy get in the way. As if on cue, the Fed made not one but two announcements involving crypto oversight. First, the Fed said that all state-chartered banks, before issuing, holding, or transacting in stablecoins, must notify the Fed and demonstrate appropriate risk management practices. On the same day, the Fed announced its new Novel Activities Supervision Program, with its own sweeping definition of novel activities to include tech-driven partnerships with non-banks to provide banking services, and, of course, crypto-related activities. Notably, the Fed said it would partner with third-party experts to better understand what they're dealing with. We are happy to provide our rate card for anyone interested. Speaking of novel activities, since 2017, Brex has been building a better bank. Well, not a bank, but a bank-like thing, as a non-bank, fintech. I'm not sure I said that right. At any rate, Brex is apparently awesome. It has experienced spectacular growth, most exquisitely punctuated on Thursday, March 9th, the day of the SVB collapse. On that day, Brex grew from 4 billion to 7 billion assets in a single day. This is one very good, if idiosyncratic, reason to streamline account opening processes. According to the Wall Street Journal, Brex has added 4,000 accounts since SVB started teetering in early March, 80% of which are still active. Boom. Finally, Brighterion and Fintech Nexus released a new report this week detailing how financial institutions are addressing the growing challenges of detecting and preventing fraud. Almost half of FIs surveyed claimed to be using AI to combat fraud, with 93% planning future investments. The AI bandwagon has room for more passengers. Read more in the comments below. This concludes the Fintech Nexus 5. Join us next week for more updates.